Well, howdy there, Internet people. It's Belle again. So today, we're going to talk about the U.S. and global economies slowing. So, the Organization for Economic Cooperation and Development put out their forecasts. They aren't great. Top line for U.S. viewers, the U.S. GDP is expected to see declining growth for at least the next 2 years, and inflation will be above ideal levels for the next 2 years. There's that forecast again. Slowing economic growth and inflationary pressure, stagflation. If you aren't familiar with OECD, it's a global economic policy group that's been in the game for more than half a century and works with about 100 countries. So, what do they attribute the bad news to? Trump's tariffs. They don't use those words because they're nonpartisan, but it says, quote, with higher trade barriers in several G20 economies and increased policy uncertainty weighing on investment and household spending, annual real GDP growth in the United States is projected to slow from its very strong recent pace to 2.2% in 2025 and 1.6% in 2026. The numbers show 2.8% growth for the U.S. in 2024. Trade barriers means the tariffs, and I don't think I need to explain that increased policy uncertainty means the ever-changing economic positions. There's an interesting bit if you read beyond the U.S. section. Quote, Euro area real GDP growth is projected to be 1.0% in 2025 and 1.2% in 2026, as heightened uncertainty keeps growth subdued. The area had a 0.7% growth rate for 2024. So, if you look at the forecasted trends, Europe picks up steam while the U.S. declines. The OECD doesn't really call winners in trade wars, but their numbers do. The forecast says Canada avoids recession but takes a hit to growth, while Mexico goes into recession. China sees slightly declining growth but avoids the inflationary pressures. It also runs estimates of an additional 10% raise in tariffs. Basically, they hit Mexico the hardest, then the U.S., then Canada, Europe, and China feeling the least impact. I'll put the link down below if you want to get into it beyond a summary. Unrelated to this report, it seems worth noting that China is pushing out a plan to, quote, enhance consumption capacity by increasing income and reducing burdens. To put that in a U.S. context, they're going to try to increase what we would call consumer spending. It's not exactly a new plan, as is being reported in a lot of places. But it being pushed out like this right now suggests they're ready to enact it. The short version is that you have another major group suggesting that the U.S. will not win the trade war and that it sets conditions for stagflation. For those who haven't watched The Explainer, stagflation is widely seen as worse than recession because once in it, it's hard to get out of. Based on the forecast, the only thing that will avoid an economic slowdown is if Trump backs off his trade policies. Anyway, it's just a thought. Y'all have a good day.